What's going on, everybody? It's Stas here. Welcome back to another video. So in today's video, we're going to be going over the top couple of stocks and ETFs that I'm watching for this upcoming week in November of 2018. So for those of you guys that are new to my channel, my name is Stas and I make videos dealing with swing trading, day trading, long-term investing, and my personal philosophies and strategies when it comes down to investing and trading in the stock market. So for those of you guys that want to learn more about that, feel free to drop a like, leave a comment, and subscribe, and also feel free to join our Discord group chat as well as our Facebook group, and follow me on Instagram as well as on Twitter. All of those are linked down below in the description box. And if you guys want to be in touch with me throughout the market hours and a bunch of other members, we have about 190 members, I believe, right now. Join that Discord group chat, guys. I promise you will not regret it. We're talking about stocks, trading, investing, strategies, and just networking with each other throughout the entire day. And actually, you know, there's very valuable information that's being spewed out in that Discord group chat. So again, make sure to get in there. It's free. All of those are linked down below in the description box. So before we talk about what stocks and ETFs I'm watching for this upcoming week, let's take a look at the overall markets and pretty much just see where the direction of the markets are looking like right now and where they're pointing as of right now. And you know, we're going to look at the Dow Jones first, and let's take a look at this 20-day 1-hour chart. So let me just quickly erase this drawing very quickly. And okay, so for those of you guys that have been watching my previous videos, we've been talking about this channel that the overall markets have been trading in. And this channel is illustrated here by these two red trend lines. And it's pretty much been playing exactly towards how we've been predicting it and talking about it in the previous couple of videos. So for those of you guys that have not been paying attention or have not been watching my videos, or you're a new viewer, pretty much the Dow Jones and the markets as a whole have sold off tremendously over the past couple of weeks. We noticed the massive sell-off here. And this is pretty much when this channel started to, form itself. We noticed the low here at about $25,000. We popped up here to about $25,750, which was a lower high from the previous. So that means we are downtrending in price as this started to push back down in price because it was a lower high. And then we noticed it pushed down to another lower low from the previous low at about $25,000. This low was at about $24,500. Then we popped up this past week. We had 3 straight green days in a row. We popped up and then got rejected by the top of this channel again, which gave us another lower high for the Dow Jones and for the overall market at about $25,475. And this is actually where I ended up trading TVIX on Friday for a 9.5% profit. Did very well this past Friday, pretty much just shorting the entire stock market by trading TVIX, which is an ETF that goes up in price as the overall markets are going down in price. So, right now, guys, we are trading in this channel, and pretty much we confirmed that from the bounce here at the resistance point on Friday that pushed down in terms of what happened on Friday. And how that correlates over to the S&P, guys, very similar. We noticed the S&P topped off here at this resistance point, got pushed down, and we're trending above the 50 SMA as of right now. And the NASDAQ got hit a little bit harder than compared to the Dow Jones and the S&P this past Friday, but this one as well is still trading in that downwards trending channel, and it's hovering above the 180 simple moving average. So what do we notice in terms of these 3 main indexes? What do we notice, guys? We notice they are all trading above their key simple moving averages. The Dow Jones is trading above the 50 SMA. The S&P is trading above the 50 SMA as well, and the NASDAQ is trading above the 180 SMA. So this week, Monday, Tuesday, Wednesday especially, they're going to be deciding factors on where the overall market is going to be going. Are we going to break below these simple moving averages and continue this downwards trending pattern in this channel that we've drawn out by these trend lines here? Or are we going to bounce here, reverse, break out of this channel, and fully confirm a reversal in the overall markets, meaning that an uptrend could be coming. Because if we break out of this channel, let's take a look at a longer term chart here. If we break out of this channel, that's going to be a very good sign that the overall markets are reversing and we're looking to actually push back and test, the previous highs of all the different individual indexes. Same here with the Dow Jones, guys. We noticed that this channel is very valid, and if we're able to pop up above here, that's going to be a good sign that the overall markets are reversing. Are we going to be able to pop up that way? Or are we going to be able to, break below the 50 SMA and continue this downwards correction that we've been in over the past couple of weeks? So pay attention, guys, to what happens in terms of the overall markets, these three main indexes that we look at to judge what the markets are doing this week, especially on Monday pre-market hours and especially on Tuesday and Wednesday as well, because these are just going to be deciding factors on what we're going to be trading for the rest of this week, for the whole week next week, and heading into the rest of November as well. So in terms of what I'm personally trading, guys, and looking to watch, or looking to trade this upcoming week, I've been staying away from the large cap stocks, mostly because the markets have been selling off. And when the markets are selling off, guys, typically the large cap stocks that I typically trade on this channel don't do so well. So they do provide intraday play. If I'm looking to swing trade them, they're not going to be looking too good because the overall markets are going down. Why would you want to trade something, swing trade something, hold it for a couple of days if the markets are selling off? It just doesn't really make sense to me. And that's why I've been personally just sticking to bear ETFs and ETFs that go up in price as the overall markets are selling off. So what I'm going to be waiting for this week, like I mentioned a couple of weeks ago, or a couple of minutes ago rather, I'm going to be waiting to see if the markets are able to break below their simple moving averages. And if this happens, guys, I'm going to be trading DRIP, I'm going to be trading LABD, I'm going to be trading, let's see what else, for example. I think JNUG is at a very good dip buy opportunity right now as well. I'm watching JNUG very, very closely, and especially TVIX as we see here, as well as UVXY. These are all at dip buy opportunities, and these all go up in price as the overall markets are selling off. So in terms of what I'm watching this week, guys, let's start off by looking at DRIP. So DRIP, ticker symbol DRIP. This is an inverse ETF. Its inverse is GUSH, ticker symbol GUSH. And DRIP, guys, it's a bear ETF. It typically goes up in price as the overall markets are selling off. And we've seen the past couple of days the markets have been going up in price. We've been recovering a little bit, and that's what sent DRIP down to about $8.75, where it's trading roughly at right now. And this is a decent dip buy in terms of percentage. It's actually about like a 25, I believe like a 20% dip. Let's take a look at this real quickly. Yeah, it's about a 20% dip. So I typically like trading stocks that are at dip buys and ETFs that are at dip buys. So therefore, there is a margin of profit for me to capture if they are able to push up. So I wouldn't really like to trade a stock or an ETF that's already at their highs, right? At $10.44, I wouldn't really want to be trading DRIP. But since it's pulled back, since we've seen some days of consolidation and a little bit of a push up, that is a good sign for me, at least, that this one's consolidating and it has an opportunity to push up and, regain that 20% that it's pretty much dropped over the past couple of days. So DRIP, guys, very closely paying attention to this one, and it trades based upon XOP. So keep an eye on XOP. How is XOP acting? And this is going to dictate whether or not you're going to be trading DRIP or whether or not you're going to be trading GUSH. And how this works, guys, is that when XOP is going down in price, DRIP is going up in price. So keep an eye and see if this is going to sell off. And, it's most likely going to sell off if the overall markets are going to be selling off this upcoming week. So I'm keeping an eye on DRIP. DGAS is another one that I'm watching very closely. And this one's in more of a horizontal channel right now, from about $14 up to about $15.50, I would say, is where this one has been trading over the past couple of days. And oh crap, I'm still on My mistake, guys. I'm still on this channel drawing tool right now. Let me just change that very quickly for you all. So perfect. So this one, guys, this is a natural gas-based ETF. Whenever the natural gas is selling off, DGAS is going up in price. And we noticed that DGAS is at $14 right now, and that gives it about a 10% profit up to about $15.30. And if we take a look at natural gas very quickly, we notice it had a very big spike up right near a resistance point at about $3.30. And remember, guys, when natural gas is selling off, DGAS is going up. So I do believe that there's a very big possibility, very big chance that natural gas does experience a little sell-off heading into Monday and into Tuesday due to the massive shoot up it had literally this past Friday. We take a look, it went from 318 all the way up to about $3.31. So I do expect a little pullback, which is going to give DGAS a very good margin of profit and opportunity as a nice little day trade or maybe a 1 to 2 day swing trade. So that's what I'm looking at in terms of DGAS, guys. And in terms of LABD, another ETF that I'm very interested in playing this upcoming week, we notice it's at a massive dip buy right now, and it's hovering above the 180 SMA, which is a very good sign that it's holding there as a support level. And we notice from $32 up to $43, that literally offers a 31% profit margin. And LABD, this is a bear ETF as well, just like DRIP, guys. When the overall markets are selling off, LABD is going to be shooting up in price. And LABD trades based upon SPSIOB, which is an S&P Biotechnology Index. Actually, was it SPSIOB or was it SPSIOP? No, this is what this is a different index actually. Let me take a look here at my inverse ETF watch list. I think it's actually here. Yes, SPSIBI. That's what it is. SPSIBI. So this is a biotechnology ETF, guys. Or actually, no, it's a biotechnology index. And pretty much, guys, when the overall markets are selling off, it's going to be pushing down this biotechnology index, which is comprised of a bunch of different stocks. And if the overall market's selling off, guys, those stocks are going to be selling off as well, pushing down this index and in turn pushing up LABD. And if we notice, guys, this is on a very solid downtrend as of right now with no signs of a reversal quite yet. We've noticed nice green days here pushing up the price in terms of this index, which means LABD is pulling back at a nice dip buy. So what I'm going to be looking for, guys, in particular is to see if SPSIBI is going to be opening up in the red on Monday, and that's going to open up a great opportunity, in my opinion, for LABD as a potential 1 to 2 to 3 day swing trade, or maybe even an intraday play. So mostly, guys, I'm watching LABD, DGAS, and DRIP for this upcoming week, and TVIX and UVXY. And I know all of these ETFs are contingent on the markets selling off. So let's say the markets do not sell off. Let's say we actually break out of this channel that the Dow Jones, the S&P, and the NASDAQ are all in, like I was talking about a couple of minutes back. Let's say we break out of this channel. What am I going to be trading? Well, pretty much, guys, I'm going to be trading the opposite of the ones that I just talked about. So LABD, guys, I'm going to be trading LABU, which is a bull ETF. Gush, I'm going to be trading Gush, which is a bull ETF, compared to DRIP, which is the bear ETF. And if we're looking at, DGAS doesn't really fluctuate based on the overall market, so I'm probably still going to be trading DGAS, but let's say we're talking about TVIX and UVXY for this particular situation. I'm going to be trading TQQQ as well as QQQ. These are two ETFs that are going up in price as the markets are going up in price. So you guys understand what I'm saying here. I'm all about these inverse ETFs for this upcoming week while the markets still pretty much play out and decide where they want to go, because as of now we really have a solid, we kind of do have a decent direction of where the market is, but since the markets are trading on top of their simple moving averages, we still can really go either way at this point. But if we break below those moving averages, guys, that's going to be a very strong signal that we're going to be selling selling off most likely for the rest of next week and possibly even heading into next week. So if we sell off here, guys, this is something that could potentially play out here. So let's say we break out here, break below here, we could potentially shoot down to another lower low here at, let's say, about $24,350, and then we could pop up back here at about $25,200 and literally just continue this channel. So there's a bunch of different, scenarios that could occur this week in the stock market, and there's just so many different, opportunities out there, but we just have to wait and see what the overall market is going to be doing, because this is going to dictate what we are going to be trading. So first of all, guys, we want to see what the markets are going to be doing. Are they going to break below the moving averages? Are they going to pop up above here and start a bullish trend? And, once we see that, we'll be able to dictate what we're going to be trading. Are we going to be trading large cap stocks if we're pushing up here? Or are we going to be trading bear ETFs if we break below and start to push down here? So I hope you guys enjoyed this video and got some insight on the overall markets and what I'm looking to personally trade for this week. If you did, feel free to drop a like, leave a comment, and subscribe. And also follow me on Instagram and on Twitter. All of those are linked down below in the description box. And if you want to join that Discord group chat as well as that Facebook group, you can find that down below as well. I'll catch you guys in the next video. Make sure to do your own research when it comes down to trading, guys. Do not copy me and anybody else that's trading out there, and just trade basically what they are trading, because you're not going to be successful doing that, guys, because you're not going to be able to do it on your own. That's the whole entire goal and idea of this channel. So I hope you guys enjoy the rest of your Sunday. Have a great one. Peace out. I'll catch you in the next video.